Good evening. Thanks very much for joining us on India Business Hour. And there is good news coming in this Friday evening. Our top story. The Indian economy has contracted by 7.5%. That's the print for the second quarter of FY21. This is a far smaller contraction than what was widely expected. Remember, the CNBC TV 18 poll had expected 8.9% contraction. It's also a significant pullback from the 23.9% contraction recorded in the first quarter. However, with the Indian economy contracting for 2 quarters in a row, India has technically entered a recession for the first time on record. Well, for more on today's GDP fine print and the economic implications of the data, we're joined by our resident expert, Lata Venkatesh. Lata, many thanks for joining us. That V-shaped recovery, very evident on the graph. If you look at what we saw in Q1 and versus what we're now seeing in Q2, far ahead of expectations, much better across the board. That's the GDP print.
Oh, yes. I think the surprise has come from manufacturing. Agriculture was always expected to be a positive 3.5%, according to our poll. Manufacturing has come positive 0.6%. A lot of people in the poll actually gave it a -8 or a -10. And this appears to be the way in which it is calculated. It is taken from listed companies' EBITDA. You know, gross value added is the EBITDA number that's taken, and that was positive for many companies. It rose a lot because expenses had been curbed, and therefore that number is what has is very different from what economists gave us. Also, other positive numbers: electricity is very good at electricity and other utilities, coming in at 4.4%. Trade, transport and communication is a bad number at -8.6 on expected lines. A lot of informal sector is over there. Services are included over there. And finance also has not done well. Finance, real estate, insurance, that's again a -8.6, 8.1, not very good. What is bad is that government sector, which is public administration, defense, services like health, education, etc., largely government sector, is -12.2. That means government is not spending much. And even in the first quarter, it was -10.3. Now, therein lies the good news as well. So government has money. If they are able to do capex-related value-added spend, then that can fire up for the second half. What also can fire up for the second half would be exports. Exports, even in this quarter, have contracted only by 2.5%, which means they're clearly on an incline. That also can work. Even capital formation is only -7.5. Nothing like the other two elements, private expenditure and government expenditure, which have really gotten hit badly. Capital formation is not hit very badly. So this investment, exports, possible government expenditure, which was not done in the first half, coming in the second half, can all be multipliers for growth in the second half. People like Pranab Sen, respected economists who have worked in the CSO, believe that there can still be downside surprises in the third quarter because the economy restocked in the second quarter. They didn't have anything in the first quarter. They restocked, which is why second quarter looks good. And therefore, there can also be downside surprises.
With both those points of view on the table, Lata, many thanks for joining us. But nevertheless, a good number coming in there as far as the Q2 GDP contraction is concerned. As we're pointing out, it is better than what the estimates were suggesting. Now, the government is cautiously optimistic after that. Chief Economic Advisor K.V. Subramaniam says the recovery hinges on the spread of the pandemic during the winters. India's chief statistician says the economy is on an encouraging trajectory. Listen in.
So the uncertainty is on the pandemic, which is why I want to urge caution as well. Typically, my stance has been to neither get too exuberant nor to get too pessimistic. I think the recovery is clearly on, and it's a sharp recovery, especially in the manufacturing sector. But given the uncertainty, I think it will be difficult to say whether we'll hit positive, in Q3 or Q4. My sense is that we should definitely be continuing this recovery, provided that the pandemic remains in control and all of us actually do our bit for that.
Somehow our economy is definitely on a very encouraging trajectory, and we perhaps will be able to, do much better. I think most of the sectors are looking press, except one sector where perhaps I don't know the region, but I will tell you the numbers, where the financial, real estate and the professional services. That is the only one area which I could find that perhaps there is something we need to pay focus for.
So that's the view from the government, encouraging data, cautiously optimistic about the trend going forward. Now, while the GDP numbers confirm a contraction in the second quarter that ended September, the Indian economy has taken a bit of a beating in October. The country's 8 core sectors have contracted 2.5% in October when read on a yearly basis. With this, output from India's core sectors has shrunk by about 13% between April and September, far sharper than the 0.3% growth registered a year ago. Well, that's the macros for you. Let's talk about the markets now. These economic indicators have come in after the markets closed for the day, but the anticipation did make for a very volatile session. So we ended the day with the Nifty and the Sensex closing with a weak bias. Mid-cap counters had a bumper session. That index rose 518 points, making this the best session in almost 38 weeks. So mid-caps on fire today. On a monthly basis, the market has recorded its highest gains in FY20, and this has been supported by record FII flows. The benchmark indices have now risen 11.5% in November. The Nifty Bank Index has gained an incredible 25%, and the mid-cap index is up 15%. So strong showing across the board for the markets in the month of November. Remember, Monday is a trading holiday, so the market action will resume come Tuesday. Now, away from macros and the markets, let's head to the bordering national capital, where farmer protests have taken center stage, and that continues to be one of the top stories tonight. Well, after days of blocking them with tear gas, water cannons, barricades and sand-laden trucks, the Delhi police finally allowed protesting farmers from neighbouring states of Haryana and Punjab to enter the national capital. Groups of farmers walking alongside tractors that were laden with stocks of food and other essential supplies are congregating in the city from different checkpoints. They have been allowed to hold peaceful protests at Nirankari ground in northwest Delhi. However, we learned that farmers who've gathered at the Delhi-Haryana Singhu border have not entered the city yet. The Delhi government has denied the Delhi police permission to convert the city's stadiums into makeshift jails in order to house the detained farmers. Our colleague Zeba Varsi gets us the latest from the Delhi-Haryana Singhu border. Zeba.
We're getting you this report from the Delhi-Haryana border, and the situation continues to remain dense here as police deployment continues to be stationed, as are the farmers. Protesting farmers are now saying that they plan to stay the night at this border, at the Haryana-Delhi border, blocking this very crucial entry point to New Delhi. They say they will continue to be here till their demands are met. They want to take their protest to the center of the city. They want their protest to be taken to the heart of New Delhi, where the parliament is, to central Delhi. The Delhi police offered them Burari, they offered them Nirankari Bhavan in Burari as a place where they could be stationed, but that proposal has not been accepted by the protesting farmers yet. The situation earlier in the day was very, very volatile and heated up as farmers were met with countless rounds of tear gas shells and water cannon used by the Delhi police to try and stop them from entering the national capital. Ever since, the situation has been a little calmer, but continues to be tense.
Zeba Varsi, many thanks. That's the latest on the ground. Agriculture Minister Narendra Singh Tomar has urged farmers to call off their agitation. Avik Saha, the Secretary of the All India Kisan Sangharsh Coordination Committee, says that farmers don't want to be at the mercy of open markets and want an assurance of minimum support price. Take a look.
3 दिसंबर को बातचीत के लिए किसान यूनियंस को हम लोगों ने आमंत्रण भेजा है। मैं आपके माध्यम से सभी किसान यूनियन के नेताओं को विनम्र प्रार्थना करना चाहता हूं कि वो ऐसे सर्दी के मौसम में कोविड के संकट में आंदोलन का रास्ता छोड़ें और वो दिल्ली आएंगे तो हम लोग जरूर उनसे चर्चा करेंगे और मुझे चर्चा करते हुए खुशी होगी।
The farmers need a guaranteed price and a guaranteed mechanism of sale, an ecology where they can make a living and hold their head up high. There should be a complete, secure mechanism by which we get price for our crops, which you decide, the government decides the price, and you give us an environment where we do not have to run from pillar to post, and we are not left to the vagaries of what what is commonly known as the open market.
So farmers continue to protest, the government now inviting them for talks. Let's shift focus now to the latest on the COVID-19 outbreak. The addition of 43,000 cases in the last 24 hours has taken India's tally since the start of the outbreak to 93 lakh. Active cases in the last 24 hours have risen by a little over 3,200, making it the third straight day of an increase in that number. At a little over 39,000, recoveries have now been below the 40,000 mark for the third straight day as well. The daily death toll from the virus, though, has dipped below the 500 mark. As far as daily testing goes, that number is back above the 11 lakh mark. I caught up with the head of the National COVID Task Force, VK Paul, earlier today. Let's hear out what he had to say on the timeline of the availability of a vaccine in the country. We also get his take on whether we will see more lockdowns going forward. Take a look.
It is uncertain, the situation is dynamic, and it is exemplified by the kind of, the rumors are going back and forth in the public domain. I think in an optimistic way, we can look forward to a vaccine in the early part of next year. Now, more than this, I think it's not fair to speculate. But yes, in an optimistic scenario, there is a possibility that the Oxford vaccine and subsequently the Bharat Biotech vaccine and Sputnik vaccines will be available for our regulator to take a final decision on this. The lockdown should be the last resort. Our comprehensive, holistic lockdown should be the last resort. And I don't think we are in any way considering that in any of the states, because they don't need this kind of a massive, shutting down. But at the same time, the current guidelines do make it clear that you can institute restrictions if need be to control the pandemic.
Well, that is the head of the COVID task force. You can watch my conversation with him. That's coming up for you at 10 p.m. tonight, right here on CNBC TV 18. Let's take a look at some of the other COVID-related headlines that we're tracking this evening. AstraZeneca plans to conduct an additional global trial to assess the corporate story. $1 billion deal could be in the making. Granules India, which has been on the block for a while, may have found a buyer. Private equity giant Carlyle is likely to acquire the company. That's per sources. Nisha, who broke that story, joins us now with the details. Nisha, where do the negotiations currently stand?
Thanks for that, Shireen. Yes, it's at an advanced stage is what I gather from 3 independent sources who have a direct knowledge to this deal development. Now, what we do gather is that Carlyle, which is a bulge bracket private equity firm, is in advanced stages and is just finalizing and putting the final bits of this particular transaction, and could be announced before the private equity industry goes vacation at the year end, Shireen. So what we do gather as far as the deal contours are concerned, it's a large transaction worth close to $1 billion, is that Carlyle could be buying out the stake from the promoters of Granules India, who have been looking at an exit. They currently own about 42% stake in Granules India, and that will trigger an open offer for the other shareholders. Put together, they would be getting a controlling majority stake in the company. Now, remember that Granules India has been up for sale for a while, has been put on the block because of the lack of succession planning at the company, and also remember that the favorable pharma sector valuations have really probably triggered this particular transaction and has put it on the fast track as well. But here I would also like to reflect upon the kind of appetite that bulge bracket private equity firm Carlyle has for India and its pharma space, because they just acquired Sequent Scientific just a few months back. After that, a minority stake in Pyramid Pharma, and now this could be a third large transaction in this particular space. We did reach out to both the parties involved in this transaction for a comment on the deal development, but both the parties have declined to comment on this.
All right, Nisha, many thanks for joining us. So that is perhaps a deal in the making. Carlyle could pick up Granules India, and an open offer could follow. Now, on to another CNBC TV 18 exclusive. Dewan Housing and Finance lenders are likely to seek fresh bids for the cash-strapped company. This comes on the back of the bidders complaining about the Adani Group's surprise move to bid for the entire company instead of select assets that it had bid for earlier. Ritu Singh joins us now with more. Ritu, the tussle over DHFL continues.
Well, that's right. The corporate clash over acquiring DHFL under the Insolvency Code, especially after RBI's internal working group suggested that perhaps corporates may be allowed to own a bank, that has only made matters worse. And because of all the protests from various bidders, including Piramal, Oaktree and SC Loy against Adani's surprise last-minute offer to acquire the entire company, lenders have had no option but to yield to their demands, and therefore they are set to reopen bids for DHFL. We've been given to understand the voting to allow the resolution to reopen bids is taking place today, and we should know the results by Monday, but we're given to understand that December 10 is the new deadline that they're looking at, and this time around they will allow bidders to bid for any of the options under the table. So whether it is bidding for the retail book, the wholesale book, SRA or the entire book, they will be free to submit a new bid in the new category that they choose. We're also given to understand that SC Loy, which was anyway seen as the lowest bidder and was only keen in acquiring the SRA book, is likely to drop out of the race, because now it has become a three-legged race between Adani, Piramal and Oaktree, who are all now, we're given to understand, only interested in acquiring the entire book. Piramal, remember, last time had only made an offer for the retail book, but given what Adani has done, we're given to understand, and given that lenders will also prefer a bid for the entire book, Piramal will also throw its hat in the ring for the entire book in itself. So that is the next step that we're awaiting. By Monday is when the new bids should formally be invited.
Okay. All right. By Monday is when we should see the next leg of this story play out. Ritu Singh, many thanks for joining us. Let's now shift our focus to the smartphone market. While the global smartphone market has been showing signs of recovery in Q3, India's smartphone shipments grew 9% year-on-year, making it the highest ever shipment in a quarter. Megha Vishwanath decodes what consumers want from their smartphone in this segment of Tech Toys.
Now, the smartphone shipments grew by 9% year-on-year to reach over 53 million units in the third quarter of 2020. This according to a research done by Counterpoint Market Monitor Service. The push from brands coupled with the pent-up demand from users due to the lockdown and, of course, strong sales on online platforms led to this growth, making it one of the highest ever shipments that's ever been recorded in a quarter for the Indian smartphone market. But what were some of the other trends that we observed in India, especially when it comes to smartphones and during the lockdown? To discuss all this and more, I am now joined by Dhruv Bhutani, editor of Android Authority. Dhruv, let me start by talking to you about this record quarter that we saw. Apart from the pent-up demand, if I were to ask you, what does this show or reflect or talk about the Indian smartphone market and the Indian user? What would you say? What do you make of this trend that we saw this time around?
I mean, absolutely. There's a lot of pent-up demand, but I think there's also a transitory period in the smartphone space, so to speak. I think users are starting to look beyond a spec sheet and looking at more meaningful upgrades. Now, be it better build quality, for example, or it could be better imaging, which is finally reaching a point where you're getting premium high-end features in the mid-range space. And of course, then there are factors like what kind of glass is being used, what kind of materials are being used. People are more focused now on a product that's going to last them longer than looking at short-term replacement cycles.
So clearly the Indian smartphone market is maturing, and so are the users who are now looking at spec sheets and components that go beyond form factor or megapixel on a smartphone. So that's a good sign right there. But would you say durability has topped the priority list for users, especially while they're looking to upgrade their smartphones? Is that something that you have observed as well?
Yeah, I think Megha ties into a lot of different factors. One, obviously, the pandemic has had an an impact on the economy, and everybody's looking at a phone that lasts longer. The market maturing, the users getting a little more intelligent about how they make their decisions, buying decisions. To draw an analogy with imaging, which has always been a big factor in smartphone purchases, people are looking beyond megapixels and are looking at the actual imaging quality on how a phone performs. And that's true in other areas as well, like durability, where the focus is more about the kind of materials used, the quality of material used. If it's a glass design, then maybe does the phone have the latest and greatest Gorilla Glass or not? People want a phone that can, at least has the materials that can try and protect it from scratches and drops, which is not necessarily the case with every phone out there.
All right, so smartphones and durability driving those decisions that people are making. Megha, many thanks for joining us. With that, it is time for us to wrap up this edition of India Business Hour. Thanks for watching. Stay tuned to CNBC TV 18. The news will continue.